think the main thing we need to talk about today is just a refresher, Manny. And as we've been talking the last couple of weeks, really is, I want to get into how do we hone in and get more precise entries, right, instead of just those zigzag entries. So I'll just take any random stock where I haven't done any marking. And first, just as a quick refresher, when you have price making some structure and then breaking structure, right? So I will change this up. Okay, so you have price driving up. So as it's breaking the highs, as it's making higher lows, it's that continuation into that upward movement. So every time you break a high after you've had a higher low is where you enter your position. In this last instance, you break a high, but you don't have a higher low that breaks this high, right? So this high is never broken. You make a high, but you don't break it, right? So your entry is when you break it, right? After you make a high, when you break it is where you enter. After you make a high, where you break it is where you enter. So in this instance, you made a high, but you never break that high. So you actually have a lower high followed by a lower low, right? Followed by a lower high. This just continues to break. So when we find our entries, if we mark this, so in a continuation trade, so your high is your 1, and then you have your Control C, Control V. You have your higher low, that's your 2. So when you break your 1, this is when you enter, right? So that the same thing repeats. 1, 2, you enter. In this case, you have a 1, you have a 2, but you never break that 2. So now the break of structure is when you have a trend going in one way and you're breaking that trend. Now you have your 1 here. When you make a lower high is the first time you actually have a 1, and then you have a 2 when you make a lower low, and then you have a 3 when you continue to make a lower high, and now you're entering when you break the 2, right? So that's the reversal entry. So the slight difference between a continuation and a reversal in my head when I'm drawing my 1, 2, 3s, in a continuation is just 1, 2, break the 1, I enter. But in a reversal, I want to see 1, 2, 3, break the 2 and enter. Right? So, and you just flip this chart for the other side. Right? Just now let's just do this. Let's just, so are we good on this one? I'm going to erase it. I'm going to just draw them again, right? Because what I want to do is just draw the other side for you. Then this is being recorded, so I'll just definitely have to remember to post it for you guys. So when you are making lower low, and then all of a sudden you make a higher low, this is where you have a break of structure. So in a continuation, like I said, you have your 1, you have your 2, and when you break your 1, you enter, right? So you have.
But I thought it was only on the way up that you do a 1, 2, and on the way down it's 1, 2, 3.
No. In continuation is 1, 2, reversal is 1, 2, 3.
Oh, got it. Okay.
Right?
Okay.
Yeah.
Yeah.
So
Makes sense.
this is on the way down. It's a continuation trade. So the
Yeah.
reversal is happening right here when you have a higher low, right? And then you have a higher high, and then another higher low. And now when you, let me just move this slightly so we have so we don't overlap the lines. When you have a break of that high, this is where you enter, right?
Nice.
So 1, 2 is continuation, 1, 2, 3 is reversal. Again, this is just a formula that I use in my head, right? And so you just have to remember, when you're continuing, you continue to make that high or the low in the same direction. You just want a rally, and then when you break the low, you enter, and assuming that price is going to continue in that direction. But in the reversal, you want to see the opposite, right? You want to see a higher low at this time, because you were going down, now it's reversing. And from there, you want to see a higher high from the previous high. So you don't have to go all the way back here, just the immediate peak. That's your 2, and then you make a higher low from the immediate previous low. When you break that high, you enter, right? So it's the same thing from up to down or down to up. Same concept, is just reversing it. Okay?
So it doesn't matter if it's on the upside or the downside, as long as it's a continuation, whether you're going green or red.
Yeah.
It's a continuation. Yeah. So you do 1, 2. If it's a reversal, it doesn't matter if you're like in the bulls or the or going down. It's still 1, 2, 3.
Yeah, exactly. Because for me, the 1 is that higher low or higher high in relation to the previous structure.
Yeah.
So the 1 in relation to previous structure, when it's a continuation, is that lower low or higher high if it's on the way up. But in breaking that structure in the reversal, that 1 is the first time, like in a downtrend, the low does not hold anymore, right? You get higher than that. In an uptrend, the high does not hold anymore. So that's the first time that structure is giving you a signal that it might break. So that's what I want to see to enter a trade.
And then after a reversal, then it becomes a continuation, right?
Exactly, right? After you've entered here, now you can say, here's my 1, here's my 2, and now I enter here for a continuation trade. Okay, so this is very, very basic stuff, and everything else is going to build up from here, right? So now we're going to go into the advanced stuff now when we look at our entries. How do we get a more precise entry? That's what I want to get into. Because this 1, 2, 3, yes, it works, but you're taking a lot of risk, right? You're taking a risk from your entry all the way down to the previous swing, right? Whether you're going up or down. That's what you're doing. And so what I want to do is enter sooner, shorten my risk size, and widen my profit target. So that's what I want to do, right? That's the goal, really. That's the goal. All right. So from here now, just give me any chart you want, right? So let's just start with any chart. Any ticker.
W, do you want to go or do you want me to
go? RKT.
RKT. Rocket Companies. What do they do? Is this a mortgage company?
Yeah.
Yeah.
Yep.
Okay, so it's good. Let's start with that. So I always, when I want to do something brand new, I always start from the monthly. But it looks like RKT just came IPO'd in August, so that monthly doesn't really help me, doesn't tell me any long story. So when I go to the weekly, then it's in a downtrend, right? So my zigzag is in a downtrend, but I see a potential reversal in the last few weeks. So then when I go to the daily, this is where, okay, we talked about where's my one? Here's my one. Here's my one. Just for now, ignore. Let me do this. Yes. Let me do this. So here's my one because I've had a low. Now I have a higher low. So I want to see, do I break this high for my entry? Right? This is on the daily. This is what I'm seeing. So on the daily, on the basic entry, this day here, July 5th is where you enter when you break above that high. It's a beautiful trade because you're one. Now, sorry. So you have your one, you have your two actually up here, and this is your three, right? Sorry. For a moment, I went to a continuation trade. So here's your one, here's your two, here's your three. So when you break your one or your two on July 19th, this is where you enter. This is where you enter. Now what I want to do is show you the next level on how to think about your entry, making it slightly better. Again, for that, we're always going to go to our hourly chart, right? We're going to go to our hourly chart. So you see it play out. Here's your one, here's your two, here's your three. What I like to do is, instead of breaking the high here, let me show you something else. So you know how we've drawn support and resistance, right? They're all horizontal lines. Now you can take those horizontal lines concept and draw diagonal lines as support and resistance. This diagonal line, because it goes up, it comes to that point. It goes up, it comes to that point. It breaks it, but then it continues back up. So you can use that same concept and draw this line. In this instance, it becomes a horizontal. It's okay. It doesn't have to be always a diagonal line. And now, instead of waiting for you to break this high, you're breaking a support or a resistance line. That's where your entry is. And so now here's where this helps you. Your original entry from here to here, your stop, is 88 cents. In this instance, from your entry to your stop is 53 cents. So one thing I tell you is, when you're thinking about entries and exit and stop losses, your reward should be at least twice your risk. So if it's 53 cents, you only need to move $1 to be in profit. If it's 88 cents, you need to be about $1.80 in profit to make money. You understand now why it's important to get in a little bit sooner? Like, you can risk the same amount of portfolio size, but you're getting out much quicker, and your risk is much smaller. You're risking much smaller. So if you're putting at play, let's say $500, now you're only risking 53 cents on that $500 versus risking 88 cents, right? Which will take up a bigger chunk of your money. So this is why it's important to enter a little bit sooner. So when you take this example here, this is a diagonal trend, because now this is a continuation. You're 1, you're 2, and instead of waiting, you see this line? Instead of waiting for this line to break, which comes about a week later, you enter actually down here. Wow, look at this beauty here. Your risk is 24 cents.
When you're doing the risk, can you explain how you're calculating that? Like the 24 cents, what does it represent?
From your entry, that's a good question. So if you're doing this, if this is your entry, right? So your risk is from this entry all the way to this swing point low, right? To this swing point.
Because that's where you naturally put your stop loss.
Yes.
Yeah.
Whether it's actual stop loss or mental stop loss, you're saying if price comes back here right after I enter, then I was wrong. I don't want to wait for price to go down $2-3 at 60 cents I'm out, right? In this example. So then when this line is moved down, your stop loss area doesn't change, right? This area is still the same area.
Yeah.
But now it's a much smaller stop loss.
Gotcha.
And if you're buying 10 shares, you're only risking $3.80 versus $6.30.
Okay. So how are you comparing that to your reward? Like, how are you calculating the exit point?
Your exit, your first exit, right? Yeah. So the way you think about exit is, if you can only do one, then twice the risk, you exit. You exit your one, you're done. If you can do two, you exit half of your position at twice your risk, and then incrementally start to release the other positions, right? And so here, if we take this example here, right? If we take this example, your entry is 930. So please take out a calculator. Let's do this together. Or I can just pull up the calculator here. Hold on, I'll just bring it here. So 930 minus your 906. So you're risking 24 cents. So your reward has to be twice that, plus your 930 is your entry, at 978 you exit. Right? So 978, so when you're entering here, you're getting 978. Is this 27th? The very next day, when the market opens, you got your exit.
Yeah.
Right? So you are going to wait and do this and risk this much and then wait for price to come up here. But you got out quicker. And if you did, let's say if you did 2 contracts or 2 positions or 4 positions, then you exit half of it here, and then you move your stop loss to your entry. So that stop loss never got triggered. Price kept going up. So now, where's my calculator? So now you 978 is your first exit. Remember that 978. So 0.24 times 2 was our first exit. 0.24 times 3 is our third exit. So at 10:02 you exit a third, right? So 24 cents more.
Okay.
So you got that exit a couple days later, and then if you still have more, then at 10:26 you exit the next position. So which you got that same day 10:26, right? That's how you keep scaling out, and every time you scale out, you move your stop to a previous. Like first time you move it to your entry plus a penny. The second time you move it to your first exit plus a penny, right? So you just keep moving it up. So if the fourth exit never gets hit, you at least get out at the third exit, right? Or close to it.
Yeah.
So you start. That's how you maximize your profit. So that's why this diagonal trend line is very, very significant. It is very significant. We haven't talked about position sizing, right? So we'll do another session where we really talk about position sizing, how you take your account. I have a few formulas we use for position sizing, right? And so when you're risking 24 cents, there's a couple of things, right? You can say, I'm going to risk the same position. Let's say if it's $200, I'm still going to use $200. Or you can say, well, now since my entry is slightly better, I can, instead of 10 shares, I can do 12 shares. You can do it that way. So when we talk about position sizing, we'll hone in on that one. So really today's lesson is about finding that earlier entry. Right, man? Is this making sense?
Yeah.
Yeah. So this is where I want you guys to focus on for the next homework, is taking the charts and identifying now this trend lines. Right, their trend lines are support and resistance diagonally, right? But they're called trend lines, and so I want you to identify trend lines. And your 1 to 3 doesn't change. Now in this instance, your 1, your 2, your 3, instead of entering at 2, you want to enter at the trend line, right? You're entering earlier. So your 1 to 3 doesn't change. I want you to still mark 1 to 3, but I want you to show me an earlier entry. Right. Again, this is now next step.
Yeah. Does this work? Does this method work better like on the hourly versus daily charts, or is it like something we should keep in mind, or does it just applies across?
It should work in any time frame, right? It's the time frame is dependent on your comfort level. Like for me, I don't have a time to dedicate to look at 5-minute charts all day long. Right? I just want to spend 2 minutes at the top of every hour to look at my charts. That's all I want to do. So that's why I use the hourly. But somebody who doesn't even have that, maybe they can only look at charts at the end of the day after work, then they will only use the daily. Right? The daily is their trigger, so they're basing it off the weekly and the monthly for their analysis, and then they use the daily as a trigger. Yeah. So don't be too bogged down on the time frame. I'm just giving you the 1 hour because you guys have a busy work style, and I'm giving you a way that works really well with somebody who has a 9 to 5.
Which is all of us.
Yes, exactly. Exactly.
Hopefully not at this pace.
Yeah.
One day.
Yeah. One day we stop doing that, right? But the thing you should think about is, once you understand, like in my charts, you don't see it. So I trade the SPY all the time. You don't see a 1 to 3. You don't see a zigzag, because now I can even look at it on my phone and know where that 1 to 3 is. Right? I want you to get there. Right? That's the goal. Is how do you get there without having to draw them?
What about your diagonal support and resistance lines? You don't draw those either? So
the reason I don't draw those is because that's third level of complexity we'll go into. And once you, the basics was the vertical ones, then we go to diagonal, and then we use other methods to identify those entry points.
Yeah, I think I see one. Is that a diagonal line right there? Or is it might just
this one?
My eyes.
This one here, yeah, this diagonal line is actually the diagonal line for the Fibonacci, so it has nothing to do with.
Oh, okay.
It just tells me where the starting and the ending point is for that Fibonacci.
Got it.
Yeah.
It still works as a support or resistance.
Oh,
at the same
so
time, kind of.
not the diagonal, but every line here is support and resistance. So I'll tell you what I did last couple of weeks. So Monday, on the 8th, I took a long position, right? And on Tuesday, everybody thought, oh, you were wrong. I said, no, I'm not wrong because my Fibonacci was above the 23.6. So I had no fear, right? This was actually my stop loss was way down here. And so the very next morning, that following Wednesday, 100% profit, right? So again, on this day, I took a position, and then it took 1-2 days. Actually, was it this? This day or this day is another 100% profit, right? So you don't have to worry about those prices reversing on you if you know where your mental stops are, right? So that's all it's about, is where is the stop. When everybody could panic this morning when we had this gap down, when market opened in the SPY about $1.50 or so less, 150 points in the S&P 500. I don't panic because I'm still above the 23.6. This is still a bull market, right? For now.
Yeah, today was a very good day for the bulls.
Yeah, I mean, look at it. It's been a good day for the bulls since June 13th, right? It's been going up. If you look at the weekly, you have your higher low, your higher high, and you haven't seen any pullback from there. It just keeps tearing it up. Right? So right now, there's really no area where price could show some weakness. My fib, I almost don't want to draw this fib. I almost want to remove it. The reason is, just real quick, when I draw any Fibonacci line, once the 38.2 has been breached, I redraw it. And so when I redraw this guy, everything has been breached, right? So that tells me the reversal is in full force. So the only thing I look out for right now, I had some zone identified here. I want to break out of this, and every time it comes to these highs, I just want to watch what it's doing to those highs. So I digressed. That's not the purpose of this exercise. I really want you guys to focus on this diagonals right now, this trend lines. And don't worry about where the entry is, because here's a trend line, right? Here's a trend line. So I just want you to draw that trend line. Here's a trend line. I want you to draw all the trend lines on both sides, by the way. It's not just one side, right? So here's the trend line. Could be from the top side, could be from the bottom side.
How many, I don't even know what to call it. Like, how many touches does it need to have to be considered?
I like at least 3.
Okay.
The more the merrier, right? But I like at least 3.
Okay.
So that's what I want you to focus on. And maybe next time we will go through your charts, because I want to see all of it, right? I want to see the zigzags, the support, resistance, and the trend lines all together.
Okay.
That's what's going to help us then identify here are our entry points. And as we get better and better at these trend lines, and when we add the Fibonacci from there, and you start to look at targets, it makes it very easy to trade.
Yeah. Okay.
And I want you to start practicing in your head not to worry about being right or wrong. Because you have zero control to be right or wrong. You have zero control. The market is going to do what the market wants to do. You just want to stack the odds in your favor, right? I'm going to take this trade because this is what the chart is telling me. If the chart is telling you that you pull the trigger, right or wrong, it doesn't matter. You remove emotions from that.
Yeah.
And then if you're wrong, it's okay, because the goal is over 20 trades, you are profitable. This will not be profitable on every trade. It's over 20 trades, over 40 trades, 100 trades. You're profitable. That's the goal.
Yeah.
Okay.
Nice.
Questions?
Should we focus on the weeklies for the practice? Or does it matter?
No, the weeklies would be a little bit less frequent. So at least the daily, but the hourly is better, right? It gives you more potentials for signals.
Okay.
Yeah. But you always start from the monthly, right? You look at your chart, the monthly, how does it look, right? The zigzag on the monthly, you go to the weekly, to the daily, and then you 1 hour.
Yeah.
Nice. Real quick, how do you, I think I asked you this last time, but this is a little bit of a pivot, but how do you structure your support and resistance lines, and how do you identify like what was the support at the hourly and resistance versus the weekly and daily? Is there like a specific methodology that you use?
So it's kind of a good question. Like if you look at this chart here, right? First you find, what is an area that has been touched multiple times, right? So let's just say here. It's been touched here, 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 and then a little bit here, and nothing else, right? So you draw this. Now, when you go to the daily from there, right? So here's that line. Is there additional lines on the daily that makes more sense? Because now you have more granularity, right? So you say, okay, I can see some here, and I can see some here, right? So because you're adding granularity. So now when you go to your hourly chart, so those are the 3 lines. Again, you'll come here and say, are there more touch points that make more sense? Like in this instance, there's more here, because the reason why I say that one is because it's touched here, 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 and here, right? Because now it's giving you more granularity. Again, you can add those. So what I like to do is I like to add different colors, right, to my support and resistance. I like to give them different colors. That way I know automatically. You see how if I go back to my weekly, if I go back to my weekly, I think I drew this on the weekly. So if I give it different colors, then when I go to my hourly, I know what I'm looking at.
Yeah.
Right? And with TradingView, one of the beauties is you can go to visibility and you say, you know what? I don't want to see the weekly on a monthly. Or you can say, I don't want to see the weekly on anything less than the hour. Right? You can choose. Or anything less than a weekly. You say, I only want to see it on the weekly. You can also do that. So
it doesn't really make sense, right? To see the weekly on the dailies. It makes sense vice versa. Like you want to see the dailies on the weekly, but not the other way around.
No, so the reason why I like to see it on both and initially is to identify, hey, look, here's a weekly line that I drew. How does that align with anything else that I might think about? and then once I draw my daily, I might just take it out. So but you have that option, right? If you don't like it, you can just say, hey, I'm just going to remove it.
Yeah.
But adding those color codes help me. So that's just how you approach it. So even your trend lines, same thing. Like you see here, I have a trend line. I have different colors for different time frames, depending on where I drew that trend line. So use those. Like you can see here, this is the blue is that monthly trend line, the green is a daily trend line that I have drawn. So use those.
Okay. And then is there a difference between, do you color code them also between support and resistance and the difference, or do you just use, it doesn't really matter to you? You can just look at it.
Start complicated.
Too granular? Okay.
Yeah. So the way I think about this is it's just a line. Support and resistance is just a line. Where am I coming from to reach that line? Am I coming from the bottom or from the top? So it's the same line either way, because one day it's support, another day it's resistance. Right? So it's the same line. So you can't really color code it from that perspective.
Yeah.
So all I want to know is when I approach this line, what happens? Does price reverse when it approaches this line, or does it slice through that area when it approaches it? Right? And that is important because we're going to talk about manipulation. We're going to talk about liquidity because Nabiyu, you mentioned stop loss. People have a logical area where they put stop loss. Institutions already know that. So when they do stop hunting, they don't have to see that you've placed the stop at 419.50. All they see is between 419 and 420, somewhere there is a stop. So they'll just drive the price to 418.50 and clear everybody out, and then they reverse it. And then you're going to kick yourself because like, why did I get out? Because they reversed it. Well, when we talk about manipulation, you will see the manipulation at play and you will stay away from that trade until manipulation is done. So that's one thing we'll talk about.
So do you never set like actual stop losses? Do you just keep them mental?
When I do stocks, I definitely use stop losses. When I do options, I don't. Right? And you can be comfortable not to set stop losses if you understand manipulation and liquidity and you don't get in front of it, you get behind it, like you let them take care of that manipulation and then you enter a trade, you'll be on the right side most of the time. Even when you set a stop, they've already cleared majority of the traders and they're already moving in the other direction.
Yeah.
Yeah.
Is it because for trading, obviously you're looking at it like daily, and then investing it's long-term play anyway, so you might not be checking it as often? Is that why you have stop losses on trading, or is that?
No, on stocks you mean?
Yeah.
No, if I'm doing stocks, if I'm wrong, like on a trade, this is strictly for trade. For investment, I don't put stops. I don't look at it on a daily basis. I'm done. Right? I'm going to look at it 20 years from now. But if I'm trading, I want to get out as quickly as possible. With options, it gets into how I calculate my risk. If I want to risk $100, for example, with options, I'll just buy a contract that one contract is worth $100. So that's my total risk. I don't need to put a stop. It can all disappear. But on stock, if I don't put a stop, I'm going to lose more than $100, right? So that's why I put a stop
for sure and stuff.
Yeah. I mean, no matter which direction I play.
Yeah.
If I don't put a stop and price goes through that stop, then I'm going to risk a lot more. With options, the price I paid is the maximum I can lose. I already know that when I enter.
Yeah.
So that's the difference. All right. Anything else?
no questions for me.
All right. So you guys.
How many do you?
Yeah.
Sorry, I don't mean to add one last question. How many do you think we should? How many stocks do you want us to kind of test out for next week? Is there like a baseline estimate, like so we have enough to practice and talk through?
If you can do 2 or 3, it's great. But do at least 1.
Okay.
Right. But 2 or 3 is better, so it gives you a little bit of practice. Okay.
Perfect. Yeah.
All right. Let's wrap it up for today then.
Oh, cool.